Hey everyone! Welcome back to our channel. In today's video, we're diving deep into the world of mutual funds and breaking down the different types of mutual funds you can invest in here in India. Whether you're a beginner or an experienced investor, understanding these types is essential to making informed investment choices. So, let's get started. Mutual funds come in various forms, and each type has its own investment objectives and risk profile. We'll cover 4 of the most common types: equity funds, debt funds, hybrid funds, and index funds. Let's look at each one, what they do, and some popular examples you can consider. First up, we have equity funds. These funds primarily invest in stocks of companies, and they are all about capital appreciation. Equity funds are typically high-risk, high-reward investments that aim to provide long-term growth. Since they invest in the stock market, the returns can be quite volatile, meaning there's a higher chance of both gains and losses. If you're an investor who can handle market ups and downs, equity funds could be a great option for you. Some popular equity funds include SBI Blue Chip Fund, which invests in large-cap companies, Myri Asset Large Cap Fund, and Axis Mid-Cap Fund, which focuses on mid-sized companies with high growth potential. So, if you're aiming for long-term growth and are okay with taking on more risk, equity funds are a solid choice. Next up, we have debt funds. Unlike equity funds, debt funds invest in fixed-income securities like bonds and government securities. These funds are less risky, and they generate stable returns over time. They are designed for investors looking for steady income with lower risk. While the returns may not be as high as equity funds, they offer a safe option for conservative investors or those who want to preserve capital. Some well-known debt funds include HDFC Corporate Bond Fund, ICICI Prudential Long-Term Bond Fund, and Franklin India Low Duration Fund, which focuses on short-term bonds with lower risk. So if you're looking for stability and are risk-averse, debt funds might be the right fit for you. Now, let's talk about hybrid funds. These funds combine both equity and debt investments, aiming to provide a balance of growth and income. The goal is to reduce risk while still aiming for decent returns, making them a great option for investors looking for a mix of both. Hybrid funds usually invest in different ratios of stocks and bonds, depending on the fund's strategy. If you're someone who wants a moderate risk-reward profile, hybrid funds could be the right choice. Some popular hybrid funds include HDFC Balanced Advantage Fund, which dynamically adjusts its asset allocation, and ICICI Prudential Equity and Debt Fund, which provides a mix of both equity and debt investments for a balanced return. Hybrid funds are perfect for investors who want to strike a balance between risk and return. Finally, let's look at index funds. These are passive funds that aim to replicate the performance of a specific market index, like the Nifty 50 or the Sensex. The fund manager's job is not to pick individual stocks, but to mirror the index, which makes them low-cost and easy to manage. Index funds are a great option if you want a cost-effective, long-term investment strategy that tracks the broader market. Since the fund tracks the index, you don't have to worry about the daily fluctuations of individual stocks. Some popular index funds include Nippon India Index Fund, Nifty 50 Plan, HDFC Index Fund, Nifty 50 Plan, and ICICI Prudential Nifty Next 50 Index Fund, which targets mid-sized companies after the top 50. If you're looking for a low-cost, passive investment that mirrors the market, index funds are a great choice for long-term investors. So, to recap, here are the 4 major types of mutual funds in India: equity funds for long-term growth with higher risk, debt funds for stable income with lower risk, hybrid funds for a balanced approach to both growth and income, index funds for a low-cost, passive way to track the market. Each of these funds serves a different purpose, depending on your financial goals and risk tolerance. Always remember to do your research or consult with a financial advisor to choose the right type for your investment strategy. Thanks for watching. If you found this video helpful, don't forget to hit the like button, leave a comment if you have any questions, and subscribe to our channel for more financial tips and investment advice. See you in the next video.